going back to older times, it's easier to kind of say, okay, this is your imports and exports, right? So we can put excise taxes on those. Or, this is your establishment or this is your large property, and so we're going to tax that. But keeping track of millions of people's incomes and taxing them on that income is only really possible in the current banking era where everybody's income is pretty transparent to the government.
Today we have a video with Lyn Alden from the Coin Stories podcast, where she talks about the sly intricacies of global liquidity and inflation. She talks about how these forces have led to increasing surveillance and intrusive ways of taxation. These individualized and ultra-complex ways of taxing individuals has really only been possible in the modern era. She goes on to explain why privacy is important and what the difference is between financial privacy and criminal activity. Privacy is a right. Crime is a choice. You choose to be a criminal. You choose to do criminal acts or not. And the government should continue to pursue criminals, but not encroach on the privacy of their citizens. It's funny, though, if everyone self-custodied their Bitcoin, Lyn describes how the government would have a logistically challenging and very expensive task of confiscating that Bitcoin from its citizens, and thus would likely be impossible. As long as Bitcoin continues to increasingly become decentralized over time, the likelihood of a government confiscation like that would trend to zero. But before we get on to all that, just want to give a shout out to our sponsor, Snapseed. If you want to protect your seed phrase so that you don't ever lose it in a fire, flood, whatever happens, Murphy's Law, then you got to pick one of these up using the link in the description below.
There's pools of dead capital out there, and the two big ones are the Treasury General Account and reverse repos. So the Treasury General Account is the Treasury issues bonds and collects taxes, and money goes into they basically have a checking account at the Fed. It's the Treasury General Account. It's their working capital, their cash balance, and then they're always spending on various the entirety of the government, and so there's like that float that they have there at all time, and that's capital that if they issue a ton of bonds or have a big tax season and they suck a lot of money in, but then they're slow to spend that back in, they basically have sucked more money out of the economy than they put back in. And so while that capital's in there, it's dead capital. It's been removed from the system, but it hasn't been recirculated back into the system yet. And so the bigger that is, all else being equal, that is like it's the bigger that is, the more negative it is for liquidity, because that's removed capital. And the inverse is true. If they draw that down, it just shoves all that capital back in. They're spending money back into the economy that they're not taxing, and they're not raising bonds to pull in because they've already pulled that in. And so while that's being put in, it's pro liquidity. And normally they try to keep a pretty static balance, several $100 billion in that at all times. And of course, they've raised it as all the numbers get bigger. The deficits get bigger, the nominal GDP gets bigger, everything gets bigger. So their target gets bigger, but they try to have a pretty fine target. But what really kind of put that into overdrive was the debt ceiling. So one of the things that they do in response to a debt ceiling, they're told by Congress, okay, you've hit the debt ceiling, you can't issue more bonds, but you still have your bills to pay. So imagine if you're a homeowner or any sort of household, and you've lost your income, but you still have your cash savings. You have no choice but to start spending your cash savings on your bills, and that's what the Treasury does. They just kept spending without raising more, and that while that happens, it pushes all that money into the economy. So that's number one, is just dead money coming back in. Two, the reverse repo is not identical to that, but it's similar. Basically, back when the Fed was doing QE, they did so much so aggressively that they actually did even more than they needed to. And so there was actually a lot of excess cash that would have preferred to be in T-bills. Because it's safer than a bank. It's T-bills are you're backed up by the federal government rather than a private institution with $250,000 in FDIC insurance. And so T-bills are very desired. And what the Fed didn't want was all that extra capital pushing T-bill yields below their target rate. There'd be ironically excess demand for T-bills. They don't want that. So they said, okay, instead of pushing T-bills, everybody fighting over T-bills and kind of interfering with our ability to be hawkish, they opened this other facility and said, you can put cash into here and you can actually borrow T-bills, and the rate is set slightly above their lower bound. And so it's kind of like this extra void of money that wants to be in T-bills, but can't be yet because there's not enough T-bills, and it doesn't really want to be in banks either. And so as the Treasury issued a ton of T-bills, they were able to soak up money from this facility and then spend it into the economy. Which
Mm.
again, this void is kind of like dead capital. It's just excess cash that just wants to be in T-bills. They actually put it into T-bills and then spend it back out. So again, they're able to they're raising income, but that income's not coming out of bank reserves. It's not coming out of household savings. It's coming out of reverse repos, which are already this void. So it actually brings it back into the system, which is pro liquidity. And so that's why the two phases. One was first with the TGA, and then the second was the reverse repo facility. And together they were enough to roughly offset the Federal
Mm.
Reserve's quantitative tightening. So bank reserves right now are higher than they were at the beginning of 2023 because these net effects have been slightly bigger than the Fed's tightening. Another thing is that what's complicated is that in the current era, the entire taxation structure is predicated on extensive surveillance, right? Because, going back to older times, it's easier to kind of say, okay, this is your imports and exports, right? So we can put excise taxes on those, or this is your establishment, or this is your large property, and so we're going to tax that. But keeping track of millions of people's incomes and taxing them on that income is only really possible in the current banking era where everybody's income is pretty
Yeah.
transparent to the government.
Hmm.
And so if you have a situation where people can, there's more gig economy work, so people can just send money more peer to peer. And then two, if there's privacy techniques to rightfully make that hard to track. Like you said, it's not just privacy from the government, it's privacy from corporations that in the modern era want to collect as much information as they can on you. So it's a natural right that people have. They don't want Facebook to know their net worth. They don't want
Yeah.
Google to know their net worth. They don't want Google to have the list of everything you bought in the past year, when you bought it, who you bought it from, and what your net worth is. That's creepy, right? And it can be
Yeah.
used against you, and it can be hacked, and it can be brought into the dark web, and so there's many reasons why you don't want that to be public, and the government is just one of the many reasons, especially if you live in a more authoritarian regime where you don't really necessarily want that to be public.
Today's video is sponsored by Stamp Seed. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stamp Seed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. Welcome to Bit Intelligence. We are committed to bringing you top-notch Bitcoin-only content. Subscribe to our channel and hit that bell icon. Okay, back to the video.
I think partially we're going to see kind of a shift in over time how people use Bitcoin, which is, Lightning is more private than on-chain transactions. We also see emerging technologies like Fedi mints, for example, Chalming mints more broadly, whether they're federated or not. Basically, Chalming mints are inherently private custodial upgrades.
Hmm.
And so I think you could have a case where a lot of payment volume, especially if people are more privacy aware, are using these just more private techniques, and they should be fully legal. They should be allowed because privacy is not illegal. Doing illegal things is legal. Funding
Right.
a terrorist group is illegal, but one thing we see in the modern era legally is that they say, okay, just the act of moving money privately is something they try to crack down on. And I think
Hmm.
that's where there needs to be a separation of just moving money privately is not illegal. It's just you protecting your own interest from all sorts of different kind of private prying eyes. But
Completely.
I think, yeah, I think we'll see more changes to how people use Bitcoin over time because there is a response function. As
Yeah.
they realize they're surveilled more, or as certain things have frictions, they can gravitate towards new technologies that are making that kind of easier to get around. And I think that's the optimistic view, is that, it's not just government surveilling things. It's that if you self custody money, it's expensive for the government to come and confiscate it. If you have all your gold in the bank, right, and there's a handful of banks that have all the gold, all they have to do is go to those banks and say, okay, it's our gold now. If the gold's in everybody's house, they're going to have trouble going door to door and getting that gold. That's why even during the 40-year gold ban in the US, which they were only able to do because they had the most concentrated political power ever,
Mm-hmm.
so supermajority in Congress, even then there were very few prosecutions or enforcements about it because there was no realistic way to do it. So some
Right.
people just hodled for 4 decades, passed it to their kids, and just got through that period. And so it's expensive to enforce. And I think the privacy is going to be a similar thing, which is that if it's open source and it's out there, the onus is on the one trying to prevent it. Um, and that's landmines of legal challenges. That's
Yeah.
landmines of how do you even enforce that. And I think a key thing is like podcasts like yours that are highlighting the practical use cases and reasons, basically trying to demystify the idea of privacy and say just because you're
Mm-hmm.
private doesn't necessarily mean you're doing bad things. It just means that you don't want Google or Facebook or authoritarian country XYZ from monitoring everything you're doing financially or information wise.